Warren Buffett just did something he's never done before. He is sitting on a record $381.7 billion in cash. That is more cash than Apple, Microsoft, Alphabet, Amazon, and Nvidia combined. The Oracle of Omaha has stopped buying. He's hoarding. For 12 consecutive quarters, Buffett has been a net seller. He has dumped $184 billion worth of stocks. He didn't just trim his positions, he liquidated 73% of his Bank of America stake, a bank he once called a core pillar. And here's the kicker, he hasn't repurchased a single share of Berkshire since mid-2024. He doesn't even think his own company is a deal. Every time Buffett has hoarded cash like this before, in 2007 and 2021, a massive market crash followed. What does the Oracle know that the rest of the market is ignoring? Why is the world's greatest investor betting against the American economy? The Oracle isn't guessing, he's positioning. The question is, are you watching the signals or are you waiting for the crash? Stay vigilant. Why is the world's greatest value investor running for the exits? For 12 straight quarters, Warren Buffett has been selling more than he's buying. He has liquidated $184 billion in stocks. This isn't a minor adjustment. It's a total strategic retreat. The biggest shock? He slashed his Apple stake by nearly 50%. For years, he called Apple the best business he knew. Now he's out. Then came Bank of America. He dumped 73% of his position. When Buffett exits banks, he's signaling a systemic risk in the economy. The signal is simple: overvaluation. The Buffett indicator, the ratio of total market cap to GDP, is at levels we've never seen before. Buffett sees the AI hype for what it is, a potential bubble. He's seen this before in 1999 and 2008. He's not playing. Buffett's greatest strength isn't his buying, it's his patience. He is willing to sit on cash for years until the market gives him a deal. He's prepared for the correction. Are you? The great exit has begun. Watch the signals and protect your capital. Act now. History doesn't repeat, but it often rhymes. Warren Buffett's record cash pile today is an echo of the moves he made before the biggest crashes in history. In 2007, while the market was partying, Buffett was quietly exiting stocks and building a massive cash reserve. He saw the cracks in the foundation. When the bubble burst in 2008, everyone else was wiped out. Buffett? He had the cash to buy the entire market at a discount. Fast forward to 2021. The post-pandemic stimulus fueled a massive rally. Once again, the Oracle stopped buying and started selling. The 2022 correction followed shortly after. Buffett's cash pile protected Berkshire while the S&P 500 shed trillions in value. The pattern is unmistakable. Buffett hoards cash when the risk of a crash outweighs the potential for gain. He isn't being bearish, he's being disciplined. Most investors are driven by FOMO. Buffett is driven by math. If there is no value in the market, he simply refuses to play. He's been a net seller for 12 quarters. That's 3 entire years of saying no. Are you watching the history, or are you hoping this time is different? Warren Buffett just sent his most alarming signal yet. For the first time in years, he has completely stopped repurchasing shares of his own company. Since mid-2024, Buffett hasn't spent a single penny buying back Berkshire Hathaway stock. The buyback machine has been unplugged. Why does this matter? Because buybacks are Buffett's favorite way to return value. If he isn't buying his own stock, he's telling you it's too expensive. The value gap is at a record high. Even the Oracle can't find a bargain in his own backyard. He is essentially betting that cash is safer than his own business. This is a market-wide warning. If the world's greatest value investor sees zero value in the largest companies, why are you still buying at these prices? He is sitting on $381 billion in dry powder. He is waiting for the inevitable correction to clean up the pieces. Most retail investors are still chasing the AI rally. Buffett is doing the opposite. He is protecting his capital and preparing for the reset. The Oracle has stepped away from the table. Are you positioned for the reset, or are you the one still betting? To see where we're going, we have to see where we've been. Today, the ghost of 2007 is haunting the market. In 2007, Buffett's cash pile hit a record high just as the housing bubble began to burst. Everyone thought he was too cautious. They were wrong. The crash that followed wiped out trillions. Buffett used his cash to buy the world's most iconic brands at a massive discount. Then came 2021. Stimulus fueled a massive artificial rally. Once again, Buffett hoarded cash while others chased the hype. The 2022 correction proved him right again, but those cash piles were tiny compared to what he's sitting on today. $381 billion. This isn't just a reserve, it's a survival kit for a market he believes is about to reset. When the hoard hits its peak, the market is usually at its most fragile. The Oracle is ready for the reset. The only question is, are you? The patterns of history are screaming. Are you watching the charts, or are you watching the Oracle? Warren Buffett is legendary for his buy and hold strategy, but right now he is doing something he has never done before in his entire 60-year career. It's a triple threat: 12 quarters of net selling, the liquidation of core pillars like Bank of America, and a total freeze on share repurchases. The scale of this retreat is unprecedented. $381 billion in cash is more than a safety net. It's an exit from the current system. Buffett's endgame isn't just surviving a correction, he is preparing for a generational reset. He is waiting for the moment when everything, from tech to real estate, is priced for total liquidation. The red alert is active. The world's most successful investor is telling you that the risk of holding is now greater than the potential for profit. He has left the building. Buffett knows that the greatest wealth is made during the greatest resets. By holding cash now, he is positioning himself to own the future at pennies on the dollar. The truth is clear. The Oracle has stopped betting on the present. He is betting on the collapse of the overvalued. The question is, why are you still at the table? The Great Reset is no longer a theory. It's a Buffett strategy. Are you ready for what comes next, or are you waiting for the crash? Warren Buffett doesn't look at the news. He looks at the plumbing of the economy, and right now the pipes are screaming. Let's look at his hidden checklist. First, commercial real estate. Trillions in debt are coming due in a world where offices are empty. Buffett knows the banks are holding a ticking time bomb. Second, the AI revenue gap. Companies are valued at hundreds of billions, but the actual revenue is barely a fraction of that. It's the dot-com bubble all over again. Then there's the debt supercycle. Global debt has reached levels that can no longer be serviced by growth. The only way out is a massive, painful reset. The stimulus sugar high of the last few years is over. The reality of high interest rates and massive debt is finally catching up to the market. Buffett isn't waiting for the storm to pass. He is positioning himself to be the only one with a compass when the visibility hits zero. Cash is his compass. The market is ignoring the plumbing, but the Oracle is watching every leak. Ignorance isn't bliss in finance. It's a fast track to being wiped out. What are you watching? The hype on your screen, or the reality in the data? The Oracle has made his move. Are you making yours? Act now. While everyone else is screaming AI or die, Warren Buffett is quietly sitting on the sidelines. To understand why, we have to look at the ghosts of 1999. In the late 90s, Buffett was called washed up for refusing to buy tech stocks with no earnings. Then the dot-com bubble burst, and he was the only one left standing. Today, the AI hype feels eerily similar. Companies are being valued at 50 times revenue based on promises, not profits. The Oracle sees the same trap. Buffett isn't against technology. He owns Apple, but he refuses to pay infinite prices for businesses that haven't proven they can actually make money from AI. History shows that every tech revolution has a bubble phase. Buffett's record cash pile is a bet that the AI bubble is nearing its limit. He is waiting for the pop. He isn't being lazy. He is being disciplined. He knows that the best time to buy is when the hype is dead and the value is real. Cash is his waiting room. Chasing hype is the fastest way to lose capital. Positioning for value is the only way to build wealth that lasts generations. The Oracle has made his choice. Are you trapped in the AI hype, or are you positioned for the reality? Warren Buffett isn't just waiting for a crash. He is defending his empire. Today, I'm showing you the Oracle's defensive blueprint to protect your own wealth. Rule number 1, cash is a position. Most investors feel lazy holding cash. Buffett sees it as the most powerful weapon in his arsenal during a bubble. Focus on moat businesses, companies with such high barriers to entry that even a recession can't kill them. These are your only safe havens when the reset hits. Buffett hates debt. In a high-interest world, companies with massive loans are the first to fall. Look for cash-rich businesses with clean balance sheets. Build your own reset fund. When the market panics and everyone is selling, you want to be the person with the liquidity to buy. That's how real fortunes are made. Positioning for protection isn't about being afraid, it's about being prepared. Capital preservation is the first step to capital growth. The Oracle knows it. Do you? There is immense strength in waiting for the right pitch. Don't let the market rush you into a mistake. Position yourself like the Oracle and wait for the reset. Are you protected or are you exposed? The signals are clear. The Oracle has built his shield. It's time to build yours. We have reached the end of the investigation. The Oracle has made his move. Now it's time for you to make yours. This is your ultimate crash survival guide. Step 1. Liquidate the hype. Review your portfolio and exit positions that rely on cheap debt and unproven promises. If there is no moat, there is no safety. Step 2. Identify the moats. Look for businesses that control their industry and have the cash flow to survive a decade-long winter. These are the assets you buy when blood is in the streets. Liquidity is your greatest power. When the market panics, cash becomes the most valuable asset on earth. It gives you the ability to buy the future at a discount. Ignore the noise. The headlines will scream for you to buy the dip or sell in a panic. Don't listen. Listen to the Oracle. Listen to the math. Stay disciplined. The 2026 wealth gap is widening. But for those with the discipline to wait and the liquidity to strike, it is the greatest opportunity of our lifetime. Buffett's final lesson is simple. Wealth isn't made in the buying, it's made in the waiting. Positioning is everything. The Oracle has shown us the way. The series is over. The investigation is complete. Now the execution belongs to you. Watch the signals, protect your wealth, and strike when the time is right. Act now.